everybody. Welcome to today's private group coaching call. Today is the 19th of September. It's Tuesday morning. We have an exciting day as we plow on into our 5 strategic trends. We're going to be talking about China, which is also what the media has been talking about over the last several hours. So we will take a look a little bit, but we'll probably look at a few different things than the media is looking at. We'll get started here in just a quick moment. Fantastic. It looks like we have a great connection. Let's go ahead and begin. As you well know, you're trading at your own risk. Always consult a trusted financial advisor before making any financial decisions. Today, we continue in our 5 strategic trends teaching. This is the 2018 edition. We have covered various trends over the years here at Follow the Money, things that we really think are important as we focus upon what's really happening in the global economy, what's happening geopolitically, what's happening globally. And these 5 strategic trends are a nice place for us to stop, pause, and take stock of what's really been happening and what we need to know as traders. Sometimes trading can seem all about math and indicators and all of this, but it's really about gaining wisdom. Trading is really about gaining wisdom about the world, about how human nature works, about human emotions, and about, realities on the ground, facing reality. And that makes you a better trader. I'm convinced that smart traders view the world differently. They see the world differently than the average person. And this is why they're successful in trading. And so through these 5 strategic trends, through this teaching series we're doing, I'm hoping to introduce you to some different ways of thinking about the world and about different ways of thinking about the market and different ways of thinking about finding investment ideas. And this morning we're going to continue what we had talked about the previous week. We had said we had shown you all the different 5 trends. One of them was China, of course, the one you see on the screen. Another one was the rising U.S. alliance with India. And then, of course, we also had another one about the cannabis revolution and democracy and also blockchain. But today we're going to be focusing upon China. I think we'll probably spend 2 weeks here. Today I want to talk about a little bit of background followed by some ETFs. So if you want to trade China, what are some ETFs that you could focus on? So that'll really kind of be the resolve of today's teaching. And then in our follow-up teaching next week, we will talk about more about China, things that we don't get to today. And then we'll conclude that one with not ETFs, but stocks, so specific stocks. So today we'll talk about some brief history about China, a little bit of background, and then we'll provide some ETF ideas. And then next week we will do another deep dive into China and then come out with some stock ideas. And then we'll move on to our next trend. So let's go ahead and for the sake of time, let's go ahead and dive into today's lecture. So as you can see on the screen, I've shown this numerous times over the years. It's one of the most important maps or important graphics I think that a Westerner can see. It's not important for those living in the East to see because the East are aware of their own history. Just as we tend to be, if we're informed about history at all here in the West, we tend to be informed about Western history. Sadly, Western history is a blip on the screen compared to global history and the history of the East. And as you can see on this clever map that's been put together by Angus Madison over at the University of Groningen, you'll notice here China is in the red, and we're going back to the year 1 AD, where you'll see, of course, the United States is nowhere to be seen. Now, this is obviously a logarithmic kind of chart because it quickly goes to 1,000 and then 1,500 and then 1,600, 1,700, and then 1820. So obviously the United States, showing up here in the 1600s, about the year 1607, is really when you're starting to have some of those early settlements here in the United States. And of course, by the way, United States has a long history before it was called the United States. But there wasn't much economic activity there that was at least measured or recorded, and therefore we don't have information for that. But of course, the green here is the grand old USA right here, as you can see. And you can see that the United States topped out in overall share of world GDP. It peaked out near 40% back when? back in the late 1940s. And we've told you before, this was the peak of the United States. The United States has never been larger on the world stage than it was in the 1940s. The 1940s and the 1950s were the golden age for the United States. Now, they were not the golden age for civil rights. They were not the golden age for human rights. They were not the golden age for any of those things. But when we're talking about the mean dollar bill, right, when we're talking about straight up money, 1940s, 1950s, it just doesn't get any better than that in the United States. And so much of the call and cry to make America great again is, seen as we're in a declining empire, and we're yearning and longing for these Leave It to Beaver days, right? The days of Mayberry and Andy Griffith, wanting this era of time where we were on the top of the heap, and China was just about as small as it's been ever in history, right? So these are the grand old days that many people want to go back to. And it's strangely, attached a lot, of course, to economic. I guess it's not strangely. It is attached to the economy of the United States back during this time, and through the 1960s and the 1970s and the 1980s and the 1990s. You can see a little bit in the 1990s we began to come back up, but then with, of course, the entrance of China into the WTO in 2001, this was devastating for the United States, as it was already on the decline, and it was very empowering for China, which has been accelerating dramatically, not just since the 1980s, as you can see here, where it kind of turns the curve on this tightness here. It starts to really get bigger again, kind of like it was back here. But you also have, in 2001, is really where it picks up. So 1980 is kind of where it really begins with all the reforms that are put into place in China. That is just astonishing what happens. We'll talk about that in a minute. But out to 2001, this is really where the whole thing kind of blows up, and China really begins to take off. Its exports now going out to to the United States and to the West through its move into the WTO. A huge miscalculation on the part of the West. In retrospect, the West opening the doors to China, often viewing China very differently than what reality suggested. If you go back and read books about U.S. foreign policy towards China back in the 1960s, back in the 1970s, back in the 1980s, China was very stealth. They played a very good game of poker with the United States and ended up being the victor. And this is, of course, what Donald Trump is often talking about. Is he's often talking about, China is taking advantage of us. We need to punch back at China. Well, he certainly has the right. He certainly has the right target. We won't take that away from Mr. Trump. He has certainly got the target on the right, person, and that is, of course, the growth of China. Now, you'll notice back here, back in 1 AD, back at the time of Christ, all the way out to 1000 AD, 1500 AD, 1600 AD, 17. You think about places like the UK, which is represented by this blue line right here, this kind of lighter blue line. Well, this is the UK. And you'll notice that, even during their big, empire that they had back in the 1700s, 1800s particularly, and then, of course, into the 1900s, where they kind of wane as the United States grows. Britain was relatively small compared to China and India during that time. And that's another takeaway to remember, is that China and India have long been major powers, China has long been the world's largest economy. It was the largest economy at the time of Christ, right? Well, actually, India was the largest economy at that time, but China was a quick runner-up, and pretty soon it moved right into pole position and led. And, of course, there's all kinds of history during this time that most Westerners have no clue about. I mean, they're completely oblivious to the rise of the East. Instead, we tend here in the United States to focus on the rise of the West, and that is to our detriment. We are woefully uninformed when it comes to global economic history. We don't understand our place in society. We don't understand our place and our position. We don't understand that the United States is a complete anomaly in economic history. This is an anomaly. We peaked and now we're declining, right? That is the message that we have been saying for a long, long time. If you look at the back of our book, Bankruptcy of Our Nation, I think it says something like, "Welcome to the end of an empire." The United States is an empire. It is an empire. There is no debating it. There is no discussing it. It is an empire. It controls the world's sea lanes today. It controls the world's currency today. It is an empire by every single definition that you can come up with. Maybe a reluctant empire, but an empire nonetheless. And it is an empire that is in decline. It is declining in strength. And that is, of course, what many people are noticing. So, of course, you can see here the size of world economies over time and their share of world GDP. This really kind of sets the tone for what we're talking about. This other map here from the Economist magazine shows this evolution of Earth's economic center of gravity. You go back here to 1 AD, and you'll see that the center of the world, economically speaking, was in China, right? In China. And then, of course, over time, the 1500s and then the 1800s, you see it, we're slowly moving. And by the 1950s, we've made it all the way over here, over to, far in between Europe, Western Europe, and Greenland. And then it begins to reverse. And this is, of course, the peak, 1950, right? This is the peak, the 1940s, 1950s. This is the peak for the West. And then the West begins to recede. And now we're moving rapidly back to the East. That is where you live. And failing to see this, failing to understand what's happening, that the ground is shifting beneath your feet, that could be detrimental to your financial health. So it's very important for you to understand that putting aside all politics, putting aside all rhetoric, putting aside all of this, this is exactly what's happening when you look at the data. If the data matters at all, this is what it's saying to us. And it's saying that the United States and the West in general is on the downward slope. There is nothing to slow it down. Now, we can shoot at our enemies. We can shoot at the person who's at the front of the pack, right? We can shoot at the guy in the pole position. We can try to blow out his tires. It may work, but history suggests that it won't. Let's talk about China here. We'll make 4 quick points that we want to make about China before we look at some ETFs. Number one, China enjoys an enormous population, right? No doubt about it. In 1980, China loosened up. Not just in the 1980s, it didn't just loosen up its economic, regulations, but it also loosened up its rules and restrictions on where citizens could live and where they could not live. And this set off a massive, massive migration. In 1980, only 20% of the Chinese population was located in cities. Okay, so back in 1980, that's 40 years ago, 20% of Chinese people lived in cities, right? Now, back in the United States, back in 1980, that number was 70%, right? So we were very urbanized here in 1980, but in 1980 back in China, most people lived in the rural areas. 80% of the people lived in rural areas. So more than 400 million Chinese citizens have emerged from poverty in just the last 3 decades alone. It's simply astonishing. And here is a really good graph that shows, this is from Statista, which is a fine outfit, by the way. But this shows the urban and rural population of China from 2006 to 2016. So this is just a 10-year snapshot, and you can see what's happening. Here's the urban population in blue. This is 582 million, of course. And here's the rural population, 731 million, right? So you have there. Well, then the following year, you had 582 million people living in the cities. In 2007, that number rose to 606 million, right, at the expense of those living in the rural areas. It moves up again by about 20 million, and then by about 20 million, and then by about 25 million, and then another, 20 million, and then here you have another 21 million, and then another 20 million, and then another 20 million, and then another, and on and on and on. And you can see that this is very dramatic. This urbanization that's occurring in Chinese cities. Right now, the cities of China, which China is kind of like, if you think about China in the form of clusters, There's a great book out called the 1 Hour China Book, where two university professors explain all of China business in 6 short stories. It's like I don't know, maybe a 100-page book. It's called the 1 Hour China Book. It's very, very helpful. It's a little dated, but it'll provide you some interesting things. But according to that book, the best way to look at China is as a series of clusters. So these mega cities that are rising all across China are producing much of the global growth, of course, that's happening right now. So at the rate that we are seeing the migration from the rural areas of China into the urban areas of China, we're talking 15 to 20 million new citizens moving from the countryside in China into the cities. And at this rate, China is adding the equivalent of the entire population of the Netherlands to its cities every year. If you take it every 8 years, China is adding the equivalent of the entire population of Japan to its cities, not to its country, to its cities every 8 years. So every 8 years, it's like China, it just grows a new Japan in its cities, okay? We're talking massive, massive growth. Now think about this. By 2030, right, within the majority of our lifetimes, I would say that most of us listening today will probably be around in 2030. By 2030, there will be 1 billion Chinese city dwellers. 1 billion. Now, when that happens, China's cities alone will have a larger population than the entire 2 continents of North and South America. 1 billion people. And you see this number. Back in 2006, it was half that. But it's rising quickly as more people move out of the countryside and they move into the cities. And these cities, of course, are exploding. And all of these people, by the way, all of these 1 billion city dwellers living in China, guess what they're going to want? They're going to want the fruits of our modern technological society. They're going to want all the luxurious life hacks that other wealthy nations enjoy, right? They also have to eat, right? They have to eat. They have to drink. So food and water demand alone in China are staggering. And it's growing rapidly as per capita water consumption rises along with rising wealth. In fact, if you look across China, you'll find that 2/3 of the cities in China face water shortages. So there's a lot of investment in China around boosting fresh water supplies. So here's a train station to show you the population situation here in the cities. Here's a train station in the Chinese New Year 2017, and this is just one train station. Chaotic scenes as hundreds of millions of people travel home, oftentimes to the countryside, for the holidays. This is the world that those of us living in the West do not see. I mean, this is, of course, a huge, huge country and growing rapidly. The second benefit that China has, of course, is its vast, very large territorial expanse. And just taking a look at the country here of China, you can note this. In fact, the country of China is about the same size about the United States as far as actual square miles. And so it's a very large area. It's blessed with many different resources. And most of the countryside, by the way, is really over on the western side. In fact, a lot of the water shortages there's a lack of water over here, by the way. It's a desert over here. But there's a lot of lack of water happening here. I mean, a lot of the activity that's happening is really down here. I mean, the southern China down here is hot. Of course, you also have Beijing up here. But overall, Beijing is facing massive water shortages all over the place. It's a very big, sizable country, lots of territory. That's a benefit. That's a blessing. But at the same time, feeding and providing fresh water for all of these people as they're becoming more prosperous is becoming challenging, of course. In addition to that benefit, you also have China as the largest economy in the world. Now, this is debated. This is something that's debated, and it's debated mainly by who? Well, it's mainly debated by the U.S., right? It's debated by the U.S. The U.S. says, no, we're still the largest economy in the world. And this is part of the denial that the West is in. The West is in denial about where it's at. It sees China growing and it thinks that it's unfair. It sees China rising and it thinks that there's something wrong with it. It sees China rising and it really screws up the Western head, because the Western head has been taught that unbridled capitalism is how you lift people out of poverty. But in China, it's not unbridled capitalism. It's state-controlled capitalism that brought 400 million people out of poverty over the last 3 decades. Look hard throughout time, look hard throughout history, and find another type of system that has created this kind of wealth for this many people this fast. It does not exist. It does not exist. China has an unbelievable record of lifting out 400 million people out of poverty in 30 years. It's never been witnessed before in history. Nothing has ever been seen like it. And what irks the West is that China actually has a form, of course, of communism and or socialism, because these words have become so ridiculous anymore, all of these isms, that they become catchwords and phrase words here in the United States that all mean terrible things, right? Communism and socialism, and you associate them with all of these negative things. But of course, in China, what you're seeing is a blending of state control with capitalism, and it's irking the West. And the West is saying that's not fair. You're supposed to have unbridled capitalism. You're supposed to let the corporations have free reign. And of course, we've seen what that's done here in the United States, where now corporations have rights, corporations are people, thanks to Citizens United, and on and on and on. Anyway, getting off on a rabbit trail. Let's keep moving. So, largest economy in the world. China enjoys the largest economy in the world. It's a manufacturing powerhouse. It manufactures, 90% of the world's computers. China manufactures 80% of the world's air conditioners. It manufactures 75% of the world's solar panels. It manufactures 70% of the world's cell phones. More than 60% of the world's shoes are made in China. Even the smartest American manufacturers know better than to go head-to-head with China. Warren Buffett, who has a big conglomerate, of course, Berkshire Hathaway, has long stated at many of his corporate meetings that we don't mess with China. We don't try to compete with China. We know it's ridiculous. It's not going to work. And but China, nevertheless, its manufacturing composes up to 40% of China's annual GDP numbers. Manufacturing, 40% of GDP numbers. Now, the United States is quite the opposite. If you look at the United States GDP, 70% of our economic output is derived from consumption, right? So China produces and we consume. China specializes in production. America specializes in consumption. You got it. So that explains the numbers. That explains the figures. So as we take a look here on this chart, we see back to 1990. Again, another chart here from The Economist using IMF data. And you'll notice, and by the way, the IMF is not a secret socialist communist Chinese outfit. It is, by the way, created by the United States. And notice here the IMF figures for the United States. You'll see the blue line going pretty strong in an upward direction, kind of flatlining here in 06 or 07 and 08, of course, with the crash, and then resuming its upward trajectory. But you'll notice that the IMF had an estimate on China, and they didn't see China surpassing the United States on a GDP PPP basis, purchasing power parity, until 2018, 2019, about now. But what happened was that their estimate was wrong. Figure that. The Western estimate was wrong. And in fact, in 2014, it actually happened. It happened in 2014 that China became the largest economy in the world based upon purchasing power parity. And that's a measure that adjusts countries' GDPs for differences in prices. For example, if you take $12 trillion, right, and you try to spend it in the United States, you're not going to be able to buy as much as if you lived in China, right? Your money stretches further in China than it would in the United States. So China's GDP is adjusted upward based upon purchasing power parity. And so Obviously, China is well on its way to becoming the world's leading economy in other metrics as well, but it's already there in PPP terms. China still needs to make the all-important transition from being a resource-intensive manufacturing hub to a modern consumer-driven economy, and that, of course, is in the decades that lie ahead. But just taking a look here at just sheer numbers, if you take a look at all the largest economies by PPP GDP in 2018, you discover that China is not only larger than the United States by this metric, but it's also larger than all of the 20-something European countries combined. Right, the entire Eurozone and the EU is dwarfed by China and its economy. So there's no doubt about it that China is larger based upon this metric. You can see it here from Bloomberg, U.S. GDP versus China GDP on a PPP basis. And in 2014, the numbers cross. There's U.S. GDP in the yellow, and this line that's just soaring higher right here, and of course this is an estimate out because we're really right about here right now, is the estimate shows it just keep going up. And so you can see clearly that something has happened, that we have been surpassed here in the West. Okay, let's also take a look at these estimates as well. These are estimates from the IMF, right? So we know that the IMF makes estimates. The estimates are not always right, all right? I mean, they have to go back and adjust them. And it seems like with China, they have been underestimating China. So we would even expect that these estimates here might be underestimated. But you can note here that IMF estimates between 2020 and 2022, again, GDP figures based upon PPP, not in constant dollars, the way they're normally reported here in the West, but using, a fair number that actually takes into account the purchasing power of each of these nations. You'll notice that in 2020, China is far, far ahead of the United States. And you'll also notice that in 2021, it continues. And in 2022, it continues. I mean, the United States just creeping right along here, 22 trillion, 22 trillion, 23 trillion, whereas China rising very rapidly. You'll also notice India catching up here right behind the United States. They're going to certainly surpass us as well and eventually surpass China, according to our research. But it'll take many, many decades. But, by 2022, Chinese national GDP is expected to be nearly 50% higher than the United States in the year 2022. That's not too far away. The top merchandise exporting economies, if you just look at the actual exports in 2015, this is an older number, but you'll see that even back then in 2014, China also surpassed the United States as the top exporting nation in the world, right? So, and this is, of course, why Trump is hammering at what? At their exports, right? He is hammering at their exports, right? So we've talked about this before, and it's very, very important that there's an idea in the West on both sides of the political aisle that there is a general weakness in the presidency. There's a general weakness in America, and this is because Americans live in denial about where things are. They don't know economic history, and they don't understand what's happening now because their media just tells them stories, and so they don't really understand what's really happening, that the ground is literally shifting beneath their feet. And the only figurehead that they can look at, of course, is the president. And if China's rising, then the president is going to look a little weak, right? He's going to look weak on the stage compared to previous times. So back in the 1980s, 1970s, 1960s, even in the 1950s, we never really associated the president with being just weak on the world stage. But that really began after the crash it wasn't even true of George W. Bush. I mean, there was a sense that he was a pretty strong president still. But it was in the wake of the 2008 crash that really this began to be exposed. It was hard to deny any further. And so there was this great amount of concern about how weak Obama was, right? There was a lot of talk about how he's so weak and, all this and that. He's bowing to our competitors, and he's just a weak president. He makes America look bad. That's what we kind of heard, And so it's not surprising that the American people went out and pulled the lever for somebody who was King Kong, somebody who was, he'll tell it like it is, and he'll tell the hog how to eat the cabbage, and he'll step out and he'll stand up for America and he'll do this and he'll do that. He'll be strong, right? Well, what we've seen since that time is that it doesn't matter who you put into the office of the Titanic, right? It doesn't matter who drives the Titanic. Does it really? Does it really matter? Right? So as the Titanic is sinking, right, and you see that the Titanic is sinking, are you thinking to yourself, now there's a big hole in the bottom of the boat. We need to change the captain, right? No, that's the last thing on your mind, right? You're looking for an escape route, right? You're looking for a flotation device to get your family off of this sinking boat. But you still got people who are duking it out saying, well, we need to put this guy in charge with a big hole in the bottom of the Titanic, right? So this is the problem, is that you have a sinking ship. Everybody who's driving it is going to be shown up and is going to look weak. I mean, it's just how it is. It's just how it is. There's no way to get around this. So this concept of this weakness in the United States, I submit to you, is going to continue. That after Trump, someone else will be elected and he'll look weak. And then somebody else will be elected and he'll look weak. But they'll run on being strong for America because that's what's important. And that kind of feeds the desire amongst the people. They don't quite understand what's happening. They don't understand that the ground is shifting, that it's inevitable, right? This is just what happens. Empires rise and empires fall, and America is a falling empire. And so no matter who runs it, that is going to be obvious. It's going to be obvious. So we started seeing this tag of weak being applied to Mr. Trump, also. So notice this word weak, and you'll start to notice it a lot. Trump is, again, very, very strong in the press. He comes across very strong, and that's, quite frankly, what America kind of needs right now. But it's not going to be enough, is my point. It's not going to be enough. You're even seeing China and the EU vow to work more closely to defend the global trade order. I mean, it's gotten so bad. I mean, if you can't see the writing on the wall, then just look at the policies that have been done in the name of protecting the United States from going down. I mean, note and also pay attention to what China is doing. When China ends up in a scuffle with the United States, what does it do? It's like, hey, let's go to the UN. Or is the United States always trying to bring China to the UN? No. Is the United States trying to bring China before the WTO? No. In fact, it's quite the opposite. China knows that the WTO and the UN are creations, they're creatures of our own creation that have become unwieldy and out of control. And so China can use the existing infrastructure that exists to harm the United States. So it uses the WTO against the United States because it's a better chess player. It uses the UN against the United States, and it's a U.S. creation. The United Nations sits in the United States. It's not a Chinese entity. It was created by the United States. And China takes the institutions of the West and uses them as blunt objects to smack the United States. It uses America's own trade policies to hurt the United States. Why? Because it's the same exact reason why U.S. did it to Britain, because the United States was a rising empire and Britain was a fading empire. You know, one of the final signs that the British Empire was going down in the early 20th century was when the United States started showing up and buying up its financial institutions. Buddy, if you see China come over and want to buy Citibank, right, or if they want to come over and they want to buy, pick a financial institution, you can start singing the song because it's time to turn the lights out. The party is over. And we are near that time. You're going to see, I suggest to you, I submit to you in the next 10, 20 years, China is going to start attacking through buying our financial institutions. And the United States will not have a way to fight. It is more grim than what is being suggested. And this is why the president is making these outlandish decisions. I mean, slapping U.S. taxpayers with a fresh $200 billion in direct taxes to stop them from buying cheap Chinese goods, right? He's literally, what is a tariff? A tariff is a direct tax upon the U.S. consumer, right? I thought Republicans were anti that. I thought the Republicans said, no, we don't want taxes. But they're like, please tax the American people so that we can stop China, right? They're willing to tax themselves to stop China because they're out of options. Now, if you listen to the United States media, the corporate media, they're going to tell you that China's out of options. They don't have any options left. Oh my goodness, China has plenty of options left. I heard that this morning. I turned on CNBC and somebody was, I think it was, well, it doesn't matter who it was. Somebody was just talking and they said, well, China, has slapped more sanctions on us in retaliation and now they're out of bullets, so I guess they lose. No, that's not how it works. They're not out of bullets. They're not out of bullets. They could stop selling us all kinds of things and they've threatened to if this belligerence doesn't stop. So on one hand, you could look at this and you could say, well, U.S. is being strong and putting China in its place. Or you could see the United States trailing trailing China, shooting at it while it's trailing it, trying to stop it. Right? There's two ways to look at it. And, corporate media is going to say, well, let's look at it, in a positive light. This is good, but in reality, it's nowhere near good, right? So you have rising nationalism in China. Is it okay if China wants to become great again? Is that okay? Is it okay if China wears made in China hats that say, let's make China great again? Is that okay? Is that all right? Is it okay if China wants to put China first? Is that all right? Is it okay if China says, you know what? We care about our people more than anyone else in the whole world. Is that okay? Is it okay if China says, you know what? We are going to make sure that China wins in the end. Is that okay? Because it's okay for the United States, right? It's okay for China too, isn't it? Nationalism is great, isn't it? It's wonderful, isn't it? It's wonderful whenever nations step on other nations to bring themselves higher, isn't it? So here you have rising nationalism in China. You have the 10 key sectors that China has focused upon making in its own territory. Instead of importing them from, more tech-savvy countries, they're simply deciding to make these things on their own. Aerospace equipment, high-tech ships, railway equipment, medical devices, semiconductors we've talked about also, right? So you have a nation that is saying, you know what, we're going to put our people first. Well, that makes two of us. Because we also have rising nationalism here in the United States. And, quite frankly, the Make America Great Again slogan largely means pushing back the economic threat posed by Easternization. Easternization. And this is kind of leading us into what we call the Thucydides trap, or actually what Graham Allison calls the Thucydides trap, which suggests that somehow, some way, if you look back at Athens, ancient Athens and Sparta, they were just kind of destined for war. Are America and China, can they escape the Thucydides trap? That might be a question for the United States to address. Because we have 1,000 military bases around the world, and 400 are surrounding China, right? So 400 U.S. bases surrounding China, that's a problem. Right? That's kind of a problem. If you're in China, and you're in the Chinese military, and you're trying to make your country great again. So the likeliest place a military clash between the United States and China is to occur is likely in the South China Sea, right over here in this area. And that's where we have a lot of bases. But there was a story just the other day which showed that the Philippines is brokering a direct deal with China, and we talked about this, to allow it and China to have a kind of a peaceful deal and have an oil and gas resource sharing contract that where they share the resources found in the sea. Because all of these nations around China, they just want the goods in the sea. I mean, they don't want the water. They want the stuff underneath the water, right? And so China says, well, hey, let's not bring the U.S. in and have them station military here in Philippines to protect you from us. Let's just broker a deal. Let's make peace, right? Next thing you know, Russia shows up and they're brokering deals with Japan. So you're starting to see through peace, China and Russia might be able to push back the United States military. It's not looking good for the U.S. The U.S.'s plans are being thwarted on a constant basis, and the reason is because we are weak and getting weaker. Now, the American empire still exists, just like the British Empire, but it's waning. It's waning, right? It's certainly waning. We still control the world's oceans, but even that is under threat now. And number 4, China enjoys a very large nuclear-armed military, which brings us back to this concept of where is all of this heading, right? Where is all of this heading? So if you look at actual military expenditures between the two countries, the U.S. and China, you'll see that the United States spends much more, right? It spends a lot more, $554 billion on its military versus the $215 billion that's spent by China. Now, China could certainly boost. Right now, it's spending about half of the amount percent of GDP on its military. So if it were to boost to the same level that the U.S. does, which it doesn't need to right now, but whenever it decides to, then of course it could compete with this number. It could certainly compete with that number. You can see here the manpower. Certainly China has a benefit there. If you look at the active personnel, reserve personnel available for military, the numbers over here on with China are obviously much larger, even the active personnel, much larger. So there's more active manpower in the Chinese military. And they're not even spending as much. They're spending half, if not even less than that. Then as far as tanks go, we're outnumbered there by actual tanks. We have more armored fighting vehicles. They have more artillery. They have more self-prepared artillery and rocket artillery. So we're outgunned there. When you look at the air forces, the U.S. has a distinct advantage in air forces. So you can see across the board, that is certainly a deficiency in China as compared to the United States. The Navy is a different story. The Chinese Navy is much larger, and the total naval fleet. Now, if you look strictly at aircraft carriers, you'll find that that's not true. But in practically everything else, you'll notice that for the most part, the Chinese Navy is miles ahead of the United States, and it's growing and growing and growing, and it's building aircraft carriers as well. So this story is not over. So we called this Easternization earlier, Easternization. This is the concept that really helps us understand what's happening, that the East is, it's not some Johnny-come-lately. It's been around for a long time. China's been around for 5,000 years of recorded history. And they have risen and they've fallen, and they've risen and they've fallen, and they've risen and they've fallen, and they've risen and they've fallen. This is what China does. So they're good at rising and they're good at falling. Right? I mean, they've done it many, many times throughout history, and right now they're on the ascent. They're on the ascent. It's not a surprise. It's not unusual. It's certainly rapid. It's a rapid rise, probably their most rapid rise ever. But certainly it's not unusual. So we see Easternization. And I use this word, it's not my word, it's Gideon Rahman's word, who is the chief foreign affairs commentator for the Financial Times. He joined the Financial Times back in 2006. And then he also wrote for the Economist magazine for probably 15 years or so. Fantastic book. I strongly recommend that you read Easternization, Asia's Rise and America's Decline, from Obama to Trump and beyond. Easternization, you can pick it up on Amazon. If you're interested in this topic of the rise of China, the rise of Asia really in general, and the decline of America and how it's showing up in so many different ways, and you might miss it if you're not looking for it, but it's plain as day if you look for it, you see it. you can see America's decline. You can see the writing on the wall. And this book is a really helpful book for kind of putting some of those thoughts together. So Gideon Rahman has a great vantage point from where he sat and provides some really compelling insights in his book, Easternization. So if I use that word, I'm often referring to his book. So now let's continue on with the remainder of our call. Let's close out here by talking about investing in China through ETFs. So now that we have that background, that important background that helps us see that this is not a blip, this is not a temporary phenomenon, this is not something that's just going to go away next year, that this is a real trend that's occurring. China is certainly a place for us to be focusing on in our longer-term holdings. So here we have, just went ahead and I ran some numbers. Let's take a look at all. There's about 48 different, or maybe 50 Chinese-focused ETFs. We're going to focus on ETFs this session. Next session, we'll talk about stocks in China. But here you can see the top Chinese ETFs by 5-year performance. So if we go back for the last 5 years, who exactly, which ETFs were the ones that really led the way higher? And you'll notice here the 5-year. You'll notice that KWEB, which is one of our favorites, the Chinese Internet ETF, the Crane Shares actually puts out a few. They also put out a healthcare version. I'm not sure if it's going to be in this list that I'm going to show you, but KURE is actually Chinese healthcare ETF. It's very low volume, but Crane Shares puts out some interesting ones, so you might check them out. Use craneshares.com, I think, or just go to Google Crane Shares, and you'll find all the different ETFs they have. But you'll notice they were the leader over the last 5 years, followed up by also Chinese technology ETF CQQQ. So kind of like TQQQ, except it's CQQQ. And that one is the Chinese technology ETF. So you'll notice a trend here. It's mainly the technology sector that has been driving China for the last 5 years, right? The biggest gains, right? Here you have China X State-Owned Enterprises Fund, CXSE. This has actually been a big winner, for some time. And this invests in companies in China that are not state-owned enterprises, right? One of my favorite ETFs also is PGJ. I like it because of how it's diversified and how they kind of approach China. It's the Invesco Golden Dragon China ETF. You'll notice over the last 5 years that's had a pretty good run as well. You'll also notice this is the top 7 here. QQQC, kind of a backwards one there. This is the Global X. They have good funds as well. Global X NASDAQ China Technology ETF. So there's tech again. Then that one had a pretty decent run, but not nearly as good as CQQQ, right? This is the tech fund. This is an internet fund. And you notice that CQQQ really beat this one over the last 5 years pretty well. And it also beat it on a 3-year basis. And on a 1-year basis, actually, this one's been a little better. This one's been pummeled pretty good on a 1-year basis. And we also have GXC. GXC is the one that we track in our global ETF portfolio. This is the one you'll typically see us get exposure to because it provides very broad exposure to China. So here's the Spider S&P China ETF, GXC. That's the one we track. And then finally, the 7th one here on this list, up as far as 5-year performance, is the iShares MSCI China ETF, MCHI. So China, more people are going to be buying Chinese stocks, and they won't even know it because outfits like MCSI and others are continuing to slowly but surely add more and more China exposure to their emerging markets funds and to some other areas. And so when fund managers buy, for example, emerging markets ETF, they're buying more Chinese shares now than they were last year. And in a couple of years from now, they'll be buying more Chinese shares than they were even today because they're slowly doing this. They're slowly rebalancing because China has been so underweighted in many of the major financial indices, and they're starting to play catch-up. So even in regular emerging market funds, you're going to have exposure to countries like China. So this is the 5-year performance. Let's look at the 3-year performance and see how things have changed. And you'll notice that the The contenders are all kind of the same. Here you have CXSE leading over 3 years. There's CQQQ, that's the technology ETF. That one's up 66%. There's KWEB, which led the 5-year. That's up 66%. There's the Golden Dragon, PGJ, up doing well. There's the other technology fund that's just kind of inferior to this one. We prefer CQQQ. There's GXC, again, right there, and the same thing. So we're looking at 3-year performance, and we see it's pretty much the same thing, except for CHIM, which is the Global X China Materials ETF, which kind of roared higher over the last 3 years. Let's keep moving and see if there's any other anomalies here. Now, what you'll notice when we take a look at this is we see what are the 1-year performance. If we take all of these top Chinese ETFs, there's about 50 of them, and we rank them according to their 1-year performance, what do we see? Well, strangely, what we see is that no Chinese ETF over the past 12 months or even year to date is positive. None. Not a single one. They are all down for the count for the last 12 months and even year to date, which would include, I guess, the last 9 months or so. So you can see here that FXI, which is one we haven't seen in this list until now, this is the iShares China Large Cap ETF. And this is where people tend to go whenever they're worried, right? So if you're going to be in the equities market in China and you have all kinds of turmoil, you'll see people tend to run towards things like FXI, which is a very broad iShares Large Cap fund. It's probably the most popular one, probably certainly has the most volume out of many of these ETFs. So looking at a 1-year, you'll see they're all negative. There's GXC, right? So that's certainly doing well. I mean, it could be doing much worse. It's up there. Here's this one that we don't really particularly care for, but notice it's doing a little better whenever everything's down, when all the chips are down. There's CXSE. Again, this is another big winner over the last several years. And it's down 10% over the last year, 18% year to date. And this is to be expected. And then there's also MCHI, which is the MSCI China ETF, which is also down. But as you can see here, it's kind of interesting. The technology ETFs are really not in this top list, except for this one. And that one's kind of been kind of a strange one anyway. So you don't really see much of the technology. That's where China has been slammed over the last year. Of course, a lot of it having to do with the trade wars. So now let's take a look at the actual fund flows, the ETF fund flows. And you'll notice this is important because what this shows is it shows us the total fund flow is the capital inflow into an ETF minus the capital outflow from the ETF for a particular period. So when you have a negative number like this right here, that means that more left the ETF, right? More people were selling it than were buying it. So if you look year to date at the fund flows for China, for these same 50 China ETFs, you'll notice that FXI, the one I just told you about, the large cap, has had the biggest inflows, right? This is where people run when they're a little concerned about China. It's a very plain Jane vanilla kind of ETF. It's not really targeted on anything. It's just all large cap, big, safer companies. And then you have the MSCI China ETF year to date, receiving the highest fund flows. And then there's KWEB, one of our favorites. In fact, the best performing over the last 5 years. This is specifically targeting the Chinese internet. So you got Tencent, you've got Alibaba, you've got some of these really, really big, Momo. You got some really big companies in KWEB that are dominating the internet in China. And this is one of our favorites, KWEB. There's ASHR. This is one that's also attracting some capital. This focuses upon the A-shares market. We don't have time to get into that now, but that's fairly interesting. And there's CQQQ. So we can see that there's still positive money flowing into some of these. There's GXC, still positive money flowing into these. More people coming in than leaving year to date. So personally, right now, as we told you at the time that the trade wars began, we told you to really kind of avoid China for the most part. I mean, you could certainly trade it, but broadly, China and South Korea were kind of off limits. And even here in the United States, we said, large caps are probably just going to do okay. Small caps are probably going to do better. We talked about that on a call we did called like trading the trading wars or something like that, trading the trade wars. And since that time, we've seen small caps rise dramatically here in the United States relative to large caps. And we've seen China just get blistered, right? So when it comes to China, we really like KWEB, we like CQQQ, we like GXC, and we're not huge fans of FXI. That's just not one of our favorites. It's just it's just a really big one. It doesn't really offer you anything really, outstanding. So just going back to this original one here, I'll say that among our favorites are really KWEB, CQQQ, CXSE, PGJ, and GXC. These are the 5 ETFs out of all the 50 that are out there that have enough volume for us that we consider these to be good buys. Now, there's some smaller ETFs that we also like, but they don't have enough volume yet. And when they don't have enough volume, you get a little skittish because are they liquid? Can you get in? Can you get out? There's always a concern about that. So these are the 5 ETFs that we like: KWEB, CQQQ, CXSE, PGJ, and GXC. On any relief in this trade war, we would expect to see many of these perform much better as far as performance goes. Now, let me show you this real quickly as we wrap things up. Here you can see many of these ETFs that we follow on China: FXI, GXC, there's PGJ. Look at what they all have in common: the CQQQ. They're all just like falling off of a cliff, aren't they? ASHR. I mean, they're all heading down. You can see clearly the downtrends that are intact. Down, 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 down. Everything's down, right? You can see it clearly. This is the trade war impacting China. And this is great news for people who want to get invested in China, because you're getting all of these, kind of on sale. Taking a look here at all of these ETFs, it's at least several of them, you can see how they perform. So over the last 2 years, you can see that they kind of rose, but then by 2018, it was over, and they started coming right back down. So many of them are down pretty good. And as you can see, it's really been bad. September 2018, there was not a single one of these that was up for the month, not even in August. Except for FXI, everything was down in July. Everything was down in June. It's been a long time since we've had some really good runs in, higher in Chinese stocks. So this is good news for those of you who like to trade, those of you who like to pick up, shares of companies whenever they're kind of beaten down and then forming a new uptrend. This would be a great place to kind of reset. Let me tell you about 2 more ETFs. First, there's the Directions Daily, the FTSE China Bull and Bear 3X ETF. So that's yin and yang. I know many of our members use yin and yang. So yin and yang. So yin is the bullish 3X ETF on China, right? So it follows the FTSE China 50 index, the China 50. And you can Google the China 50 index and see what that's all about, or you can even look at this particular page. Just Google Direction Daily China Bull 3X shares, and you'll find that you'll see the top 10 holdings here: Tencent, China Construction Bank, China Mobile, Bank of China, on and on. And you'll notice that yin is the bull and yang is the bear, right? So yang has been doing pretty good. That is an inverse 3X ETF. So whenever China goes down, this one goes up. When China falls by 1%, yang goes up by 3%, right? So China falls by 3%, yang goes up by 9%. So leveraged ETFs can be fun. That's 3X. There's 2 of them, one on the upside, one on the downside. Then there's also the 2X, based upon this same exact strategy using the FTSE China 50 index. And this is XPP. This one's a little less known, and it's a 2X. So 3X can often be really, really strong. This one doesn't have a bearish version. It just has a bullish version. So XPP could be another ETF that you could also consider for those of you who like leveraged. So that's a 2X, and then you have the 3X here, yin and yang. All right. Okay, we got a lot of information out today, important information about what's happening. Let me also say this, that we'll be returning next week with more on China, and we'll conclude our topic on China by focusing upon our favorite Chinese stocks. So today we talked about Chinese ETFs. Next time we're going to talk about specific China stocks. And then we're going to move away from China. We're going to move into some other trends. But it's good that we had a chance to cover this holistically today, and then we'll do a little bit more next week and continue on. God bless everybody. Have a safe and prosperous rest of your week. We'll see you right back here next Tuesday. If you have any questions for us that you want answered in between those two times, be sure to reach out to us, info@followthemoney.com. God bless everybody. We'll see you right back here next time.